but also some hope about what's ahead with weather and potentially being able to come out of this planting season with an okay crop in places.
Hi, everybody. Thanks for joining us here on the Comstock channel. I'm Marlon Bowling with you. As always, make sure you like these videos. Click that little bell icon down below to subscribe. That way we can let you know when we post new updates, and share it with others as well, especially today, because we're going to be covering the new information that came out from USDA in the WASDE report. Well, my guest today is Joe Camp of Comstock Investments. And Joe, let's take a look at the latest June WASDE numbers that came out from USDA. All in all, I can't tell the market had a big reaction to those numbers. I want to get your take on it. Let's walk through these and get your thoughts on what USDA had in the data this week.
Had or didn't have in the data this week, because there were very little changes made from last month. And that's the real theme. I, of course, talked to farmers all throughout the session and immediately post-report. I wrote the recap for the Comstock report on what we saw from these new estimates, and using phrases like, well, it was a dud, it was a kick the can down the road type of report, it was a punt. We've heard that before when we talk about USDA reports like this, but it was simply very much that, a punt towards next month's report, which is one that depends before that on the new numbers that'll come out at the end of the month. So if you're going to give the USDA any excuses, which I don't like to after a report like this, you have to say that they're going to wait and see and be conservative for now until they get those numbers at the end of the month worked out on acreage and on quarterly grain stocks. So the grain stocks, of course, they have something to say about disappearance and what that says about usage over the last 3 months. And then acreage, we know what that means for supply. But some disappointment, again, because you look at this report and there was exactly no changes made on the U.S. corn balance sheet. None of those revisions upward for demand like we think this last month's worth of data would call for. And even though it was a wild card, unexpected by most, it was still a possibility that we could see a corn yield cut. But we didn't get that. And again, it's something where we look ahead now on what's ahead for these future reports.
Let's take a look at the individual reports that came out. Which one do you want to take a look at first here?
If you look at the U.S. balance sheet results, we start with corn. You see that the corn ending stocks came in just above the average trade guess because that consensus estimate did call for a revision upward, slightly so, for demand. It could have been either or both ethanol and or exports because of how they've been running firm over this last several weeks. But again, no changes there, and that left the ending stocks just a bit higher than anticipated, and also therefore even with last month. Now the soybeans, just about as pegged. They were raised slightly in terms of new crop ending stocks, but that was a product of the old crop balance sheet changing, the old crop crush estimate taken down by just 10 million bushels. That's the only change made on the soybean balance sheet. Wheat actually coming down below the average trade guess for ending stocks. There's more moving parts for wheat in this report because the WASDE update did come along with a crop production report. So a look at winter wheat yields for one, a better number for Kansas, ultimately though being offset by lower yield expectations for soft red wheat. You have overall that ending stocks estimate coming down just a bit, again, below the average trade guess as we see here. And that being friendly for the market, but yet mostly shrugged off by prices that were still weaker by the close for wheat.
Yeah, that they were. All right, so let's take a look at another one here. Let's take a look at, what do you think? World grain ending stocks might as well dovetail on the U.S. here.
Right. And that we can start with wheat. At the bottom of the list, we see that wheat ending stocks actually experienced pretty material revisions and mostly lower. As we had called for before the report, we did receive cuts to the wheat crop estimates in Russia, Ukraine, and the European Union. So that's not all that bearish here, but like the domestic changes, not enough to be bullish about here for the world wheat storyline. Now, for corn and soybean ending stocks, you can also see where we ended up relative to the average estimates there, and they're just not all that different. The things to point out, though, within these overall numbers, more importantly, would be individual components like for South America. Also, a phrase used lately here to describe the USDA has been stubborn or seemingly stubborn on South America, because as much as they're above, for example, Brazil's CONAB agency or the analysts in Argentina, the grain exchanges there, above the rest of the private estimates floating out there, they just don't move on these South American estimates. The only change made was a 1 million metric ton reduction again for Brazilian soybeans. That still leaves them at least a couple million metric tons above the average trade guess. And you had no changes for Argentina corn or soybeans, and also back to Brazil, no change for Brazilian corn. So a bit of a disappointment, but all of that flows through to a very little changed world balance sheet for corn and soybeans, and we can see that in these estimates remaining not far from last month and not too far from what was expected.
When you look at these world crop production numbers that include South American corn and soybean production, I know the trade has to be getting really, really frustrated with the fact that USDA seems to have just stuck their feet in the mud and they refuse to budge on that. Even though a lot of people have lower estimates, they just stay the same as what they had the month before.
Right. We've tried to explain some of the discrepancy here, if you want to call it that. In part, it's a feeling that they're constrained by one still being above everyone else, above Brazil's CONAB for one. We should bring up again on last year's soybean crop. What we'll have more of is a picture of CONAB's estimates, again updated tomorrow morning to follow up this report day. We can see if that gap's closes a little bit more on Brazil's end. There has been also some conjecture out there that CONAB has been too light on acreage, but at the end of the day, everybody's still singing the same feeling that USDA is too high and they're slow to come down.
And just a shameless plug here. If everything works out right, I plan to have our own Matthew Cruz, who is in Brazil right now, talking about the CONAB report when it comes out tomorrow. And he'll have boots on the ground, and he can give us a firsthand account of what those numbers mean and what he is able to witness around that part of the country there as it comes to the safrinha corn crop that's coming up to harvest time here as we move along. So the way we closed on the grain markets, what does that mean now as we move forward? What kind of signs do you get for the rest of this week, let's say?
It wasn't a bullish report, but yet after an initial push lower because of, say, the disappointment that you had no reductions to the corn estimates as expected, you did not have that significant enough lowering of the South American production estimates for soybeans. You had nothing too aggressive on reductions for stocks on wheat. It was, I think, still a friendly close when we see corn futures up for the nearby at 4 3/4. Beans just a little change for the front month, a little pressure on the back new crop months there. Ultimately, not a huge type of reaction. I think because the trade, in part, in disbelief of these numbers for now, knowing how drastically they are yet to change, particularly for the U.S. new crop, but also just getting back pretty quickly to trading these items of weather and wanting to monitor demand, which there are mixed signs of. And all of a sudden, like we would see the spreads show today, still pretty firm on old crop usage and tighter availability of what's left out of last season, but also some hope about what's ahead with weather and potentially being able to come out of this planting season with an okay crop in places.
So what about the wheat market that looked like maybe it had put in a bottom yesterday, and then today we just take it out again? Now, what does that do anyway for the longer term outlook?
In part, you have to get back to this thought that, oh, well, it's not over with yet in terms of it being June, and that seasonality of this month being negative fits along with I think, a taste of what the trade was talking more and more about again today, which was that harvest results down in the southern plains are working out much better than feared, we'd call it. Again, a reminder, and part of that with the Kansas wheat yield bumped up by 2 bushels per acre. It's much better than a year ago in so many places. And again, even after this threat of drought returning, they're shaking out, pretty fairly in Texas, early Kansas, and as that harvest ramps up and moves northward.
Let's take a step back. Overall, when you look at the impact of this report today, longer term, what kind of impact do you think this is going to have on the year's marketing opportunities here on the grain?
I think it can be short-lived in its influence because of the close not indicating that anything was necessarily broken in terms of these chart technicals that maybe mean more in the time frame from now until the next report. These are the crop reports that we have to talk about having such a lasting influence on this market because of what they mean for particularly the new crop going forward. You say that knowing that we could also have marketing opportunities that are led potentially by a higher old crop, and that would fit with the grain stocks report coming out on June 28th. We talk about ethanol usage having been firm enough to support basis lately. You hear about feed basis, $1.50 or more, down in the southern plains and competing with trains that would export corn to Mexico. All of a sudden, on the demand side for soybeans, some interest from China finally popping up and some confirmation of that being observed, including this morning with a flash sale. So that's the wild card for old crop, is that demand all of a sudden works higher into the rest of the summer. And all of a sudden, farmers at these lower prices from the last several weeks are going to turn more tight-fisted on sales. And then if we get into an acreage report where finally we see the ramifications of late plantings and maybe lost area, that can be the marketing opportunity that still is provided to us yet this summer into potentially beyond what we normally think of as highs that are marked out in late June, and something that could extend itself at least into this next month of July.
Given how stubborn USDA tends to be, how likely do you think they are that they will cut their planted acreage down because of the delayed planting season this year?
Yeah, I think the anecdotal evidence is there. Again, whether that matters or not, it is supposed to be a survey-based report. Those surveys were wrapped up over the last 2 weeks. By that point, there were prevent plant decisions we know that were made from farmers in spots across the country. We talked to farmers today that are still planting soybeans out there and are getting to a point where they're going to have to shut off even that in a manner that will influence acres. So we should see some revisions. We're more comfortable for now thinking that corn acres can go lower. You'd think there would be an effect of late soybean plantings, but that can always be offset by some of that shifted plantings from corn.
Well, let's shift gears and go to the livestock side of the ledger here. And it looks like on the cattle, I see a lot of red at the close. And on the hogs, a little bit of green for a change. So now, are they going to trade places for a while?
It could be that we're observing some spread unwinding after that sharp slide for hogs and the pretty strong rally for cattle again. You're at a point where the June live cattle contract is entering the delivery period, still at a discount for most of what we see out of the cash market, but yet it's a couple of weeks yet before convergence has got to take place there. And there's some ideas that we're going to be at a point this season where these packers are going to try to push this market a little lower, yet they may not have the incentive to do so, instead being rewarded by strong beef prices. They're still holding firm. Ultimately, though, the fundamental storyline can have been played out after this run-up that we've had. Some profit taking by speculators would be the reverse, as we allude to here on what's occurred with the hogs, where they've those hedge funds all but cleared their positions long out of the hogs. And after the slide that we've had occur, you can almost reach every of the various important technical objectives to the downside, and then deserve, if you will, a retracement or a rebound of some sorts. And we're having signs of that starting today.
Do you read anything into the spreads that are appearing on the cattle and the hogs right now between the nearby and the deferred months?
The spreads are interesting because you've got a mixed spread weaker into August, as would be seasonal for live cattle, but still very hefty premiums, or we at least did have really hefty premiums out in the feeder cattle contracts at a time when cash has remained so strong. I think we think a lot about the spreads going forward and potentially weakening as we finally get to a point where we're moving past the summer months and the peak of demand and out into a period where we're optimistic about finally the cattle herd rebuilding or starting to gain some traction in that direction. But yet again, with some strength into the deferred contracts, that's not something that's taking place just yet. Something still, though, we would bring up, we're going to watch out for, as it would influence our marketing decisions if we need to step in and take advantage of some of those premiums out in the back months. We're going to have to be ready to do that.
And I guess I would be remiss if I didn't bring it up. The Fed left the interest rates the same, right?
We do have no change for interest rates, but yet listening to the press conference and wondering more about guidance for the rest of the year. Coming into today, it was back to about 50-50 as to whether or not the Fed would reduce rates by their September meeting. The outside financial markets felt more confident that we would have an interest rate reduction still this year after the latest consumer price index report this morning. Inflation by that measure having cooled off just slightly relative to expectations. So the market cheering that on, at least stocks, these S&P indexes reaching new all-time highs here this morning. It's going to be worth watching and continuing to monitor that, of course, as we tie it back to our grains. We know if, like today, we have a continued fall lower in the dollar, that can only serve to attract more investment interest in the broader commodity space, and it can improve the terms of trade for our grain and meat exports as well.
Well, you mentioned the end of the month reports. That will be the quarterly stocks report and the final planted acreage report, correct? Anything else between now and then that you're going to be keeping an eye on for USDA data?
We'll have a watch on those weekly crop progress reports. There are those out there, and I'm sympathetic with the view that, hey, what do these ratings mean? They have very little predictive power this early in the season, and even later in the season, we don't usually see them matching up with what we'd expect in the way of USDA yield estimates. That was the case, as we were reminding folks in our report recently, about last year, where at one point ratings were as low as they had been since the worst of 2012, yet record corn yield. And then back in 2012, the way they started out at an even higher level than what we're looking at today, 77% good to excellent, and of course sliding sharply from there. So we're reminded as we look at these crop reports each Monday afternoon about the risk that's still ahead up in front of these reports at the end of the month. And then beyond that, pretty quickly following is, of course, the 4th of July, which everybody thinks is sort of a psychological inflection point at times. So maybe more interesting market dynamics to come.
Those extended 3-day holiday weekends, they can be pretty potent when it comes to market volatility.
Right.
That's for sure. Well, thank you, Joe, for talking with us and explaining everything. Joe Camp of Comstock Investments. There you have it. That'll do it for this episode. And we do thank you for joining us. For producer Brianne Hendrickson, I'm Marlon Bowling. We'll catch you next time on the Comstock Channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.